Good morning, good evening, good afternoon from wherever you're watching this video from today. It is Josh, the other half of Armada Trading, and today I decided to bring you a very kind of special series type thing. We're going to be doing a series of it because everyone just needs something to get through it. So, alright, grabbing a drink. So, we're going to be talking about how to be a consistent, a profitable, and just an all-round better day trader, swing trader, whatever you want to do. Because there are two key rules that you need to, or three key rules, and one of them you need to plaster it everywhere. You need to plaster all of them everywhere, and just abide by it at all times before you enter a trade, before you exit a trade. You just need to consider these things. So before we get in there, I just need to disclose I'm not a financial advisor. Everything I say should be taken with a pinch of salt. All stocks are battlefields and you need to do your own due diligence on them before you enter the trade, okay? We can try and provide you with good insight to them and what we think is going to happen, but the truth is the only certainty with the stock market is nothing is certain with the stock market. So I wanted to get that out there. And before we go on, make sure if you enjoy this, you drop a like, subscribe, and yeah, welcome to Armada Trading. So, the two key rules. Number one key rule, protect your principal. Now, what do we mean by protect your principal? So, as a kind of successful trader, you've got market knowledge that you can get from the right places such as FinViz, and later on in this series we will be going into FinViz and how I like to screen for stocks and which stocks I like to find in, the characteristics and the fundamentals behind them, which trends I like looking for example, nice bull flag here on AMC can make a sizable sum money, but again we'll get on to why people lost a lot of money on this as well. So you've got market knowledge, mental and emotional discipline, your two foes. Or your emotion is your biggest enemy in the stock market. That's the one thing you're competing against. If you go into every trade with a clear head, no emotion behind it, you'll be golden. And that's why I think a lot of professional traders can make great serial killers or psychopaths in general, because there's just zero emotion. And they protect their trading accounts, and that's the most important thing, is protect your trading account. And why do I say protect your trading account? I say this because it's a lot easier to lose your account and to blow your account up than it is to turn you into a millionaire. So, for example, if we go and you start off the week with £1,000 in your trading account, if you gain 10% of that, then, happy days. So you made £100 there. If you lose 10% of it, you're now on £900. So if you lose 10% of it, then you got to gain, you got to gain, maths has gone out the window. If you lose 90% of it, you've got to gain 900% back. So just put that into perspective. If you lose 90% of your initial £1,000, you then have to gain back 900% just to break even. And I feel that's why a lot of people lose money, and that's why there's the common fact of 80 to 90% of day traders lose money. We won't be one of them. I won't allow you to be one of them. Protect your principal. Before every trade, think to yourself, why am I entering this trade? What price am I going to enter this trade at? What's my exit strategy? And again, it's just, why are you entering that trade? Okay? This isn't a get rich quick scheme, and that's the trouble, is a lot of people, as we can see here with AMC, did not protect their principal at all. And don't get me wrong, I still feel the short squeeze may come from AMC, as we were talking about earlier on the channel. But protect your principal. Don't get carried away by emotion. I'm still in AMC because I believe, and I've done my due diligence, and I feel that it's going to squeeze. So if you're looking for your confirmation bias, then here we are. But just protect it at all times. And number 2, trade to trade well. Don't trade to make money. Trading to trade well and trading to make money are 2 completely different things that coincide perfectly. So if you trade to make money, there is nothing that will blow your mind and cloud your vision and make you lose your head, rather than going, it's gone up $2 today, so I've bought 1,000 shares, that's £2,000 or $2,000 profit I've made there. Happy days, yeah. Don't do that, whatever you do, because you'll do that and then you start seeing the red numbers, and the red numbers then make you panic, emotion gets in the way, and what happens? All the green numbers make you get greedy, and then you lose it all. And that brings us on to the third and final quick one. In the stock market, bulls make money, bears make money, but pigs get slaughtered. So whatever you do, don't be a pig, don't be greedy. Take your profit and run. Make consistent trades, and consistently trading well and trusting your research and trusting your principle and protecting your principle will make you money. And that there, I'm not a financial advisor, but that is a promise. If you protect your principle and you trade well, you will make money. You don't need to be a rocket scientist. You don't need to be using Fibonacci lines and drawing wedges everywhere and what have you. You don't need to be doing that. Like, we don't need to be going through everything. You don't need to be hitting putting a million lines on, because you don't need that. It makes no sense. The only ones I'll ever really have on, I might have the volume, and I might have like the VWAP, so the volume weighted moving average. Those are the only 2 kind of things like that. There's no need to overcomplicate it. You just do your due diligence, protect your principle, and double check. And if emotion is going to get in the way, for me and for you and for your trading account, please just stand up, walk away, go out, go for a run, have a walk, do something. Because you look after your trading account will look after you. Okay? That is a promise. So, moving on, later on in this series, that is the first episode done. Later on in this series, we will be going through FinViz, how I like to screen for stocks. We're going to be going over trend following. So exactly, you can see here, downtrend, uptrends. It is pretty self-explanatory, but it's knowing what to look for with the reversals. That's what that's what you need to do. We'll be going through price action. We'll be going through candlestick trends, bull flag trading, swing trading. We will be going through that. So again, I've been Josh. If you can drop a like and subscribe to the channel, it would be greatly appreciated. I hope you enjoyed this video, and let's have a successful week this week. Take care, guys.